Understanding market segmentation, a comprehensive overview. Market segmentation is a powerful marketing strategy that involves categorizing prospective buyers into distinct groups or segments based on various criteria, including demographics, geography, behavior, and psychographic factors. This approach allows businesses to better understand their target customers and tailor their marketing efforts to meet specific needs, ultimately enhancing their effectiveness and efficiency. Key takeaways. Definition: market segmentation identifies targeted groups of consumers to create tailored products and branding strategies. Segmentation types: markets can be divided through various methods, including demographic, geographic, psychographic, and behavioral factors. Minimizing risk: by focusing on specific segments, companies can reduce the risk of product failure and optimize their marketing strategies for higher returns on investment, ROI. The importance of market segmentation. Market segmentation serves multiple purposes that collectively contribute to a company's success. Here are some key aspects of its significance. Risk minimization: understanding which products are more likely to resonate with specific segments allows companies to reduce the risk of investing in products that may not perform well in the market. Targeted marketing: segmentation enables businesses to create more focused marketing campaigns that speak directly to the desires and needs of smaller consumer groups. Resource allocation: by identifying the most promising segments, companies can allocate their resources more effectively toward marketing and product development that are likely to yield the best returns. Types of market segmentation. There are several primary types of market segmentation that companies can utilize, including 1. Demographic segmentation. This method categorizes consumers based on demographic factors such as age, income, gender, race, and education. Businesses often rely on this straightforward approach to identify market segments with similar needs. Example: a new video game console targeting young males with disposable income. 2. Firmographic segmentation. Similar to demographic segmentation but focused on organizations, this method evaluates a company's characteristics, such as the number of employees and revenue. Example: a software provider customizing its offerings based on the size of the companies it serves. 3. Geographic segmentation. This segmentation categorizes consumers based on their physical location, under the assumption that geographic proximity may influence consumer behaviors and preferences. Example: a clothing retailer promoting rain gear in locations prone to heavy rainfall. 4. Behavioral segmentation. This approach analyzes consumer behavior, categorizing them based on past purchasing habits and interactions with products. Behavioral data help predict future buying patterns. Example: targeting millennials with craft beer promotions versus traditional brands aimed at older generations. 5. Psychographic segmentation. Often seen as the most complex type, psychographic segmentation categorizes consumers based on lifestyle, personality traits, interests, and opinions. This segmentation can produce the most nuanced insights but is also the most challenging to gather. Example: marketing fitness apparel to consumers based on their interest in various sports. How to determine your market segment. Identifying market segments isn't a one-size-fits-all process. Companies can follow a structured approach when implementing market segmentation. Phase 1: setting expectations/objectives. Diagnose the purpose of segmentation. Determine expected outcomes and potential market segments. Phase 2: identify customer segments. Evaluate existing competitors' target segments. Gather relevant market and demographic data. Phase 3: evaluate potential segments. Assess risks associated with identified segments. Define the ideal customer profiles for effective targeting. Phase 4: develop segment strategy. Test assumptions through sample markets. Define what success looks like. Phase 5: launch and monitor. Involve key stakeholders for feedback. Address potential barriers to execution proactively. Benefits of market segmentation. The implementation of market segmentation, while effort-intensive, can significantly enhance a company's overall profitability and brand presence. Notable benefits include increased resource efficiency. Focused marketing campaigns reduce wasteful spending across non-target demographics. Stronger brand image. Tailored messaging creates clearer brand identities that resonate with specific target groups. Greater consumer loyalty. Personalized marketing often fosters deeper connections with customers. Enhanced market differentiation. Clearly defined messaging can distinguish the company from competitors significantly. Limitations of market segmentation. Despite its many advantages, market segmentation is not without challenges. Higher upfront marketing expenses. Gaining insights presumes a higher initial cost for market research. Increased product line complexity. Over-segmentation can lead to a confusing product mix that dilutes brand consistency. Risk of misassumptions. The reliance on demographics may overlook individual variability, potentially leading to incorrect conclusions about consumer needs. Real-world examples of market segmentation. Market segmentation's effectiveness can be observed in everyday products and advertising strategies. Automobile manufacturers. Companies utilize geographical data to market specific vehicles tailored to urban or rural consumers. Cereal producers. They market different brands based on age groups, emphasizing nostalgic themes for older consumers while tapping into trendy themes for younger audiences. Sports shoe manufacturers. Different products are developed for various segments, including elite athletes and individuals with specific health requirements. Conclusion. Market segmentation plays a crucial role in allowing businesses to effectively connect with their target audiences. By categorizing consumers into distinct groups and crafting tailored marketing strategies, companies can improve their efficiency, brand loyalty, and overall market performance. Understanding the different types of segmentation and how to effectively implement them is essential for today's competitive business environment.